Realty Income, or ticker symbol O, in my opinion, is still offering a substantial buying opportunity where it's trading as of currently. And because of numerous factors, I have reason to believe that Realty Income will be trading above $70 per share very soon here. So I promise you, whether you own a single share of Realty Income or 1,000 shares plus, make sure to drop a like down below, stick around until the end, and let's get right into it. I just finished my brand new dividend investing ebook where I share exactly how I went from zero to now over 7 figures invested, and also on how I earned more than $6,000 per month in dividends. I also finished my custom dividend tracker that you can use to track your dividend income progress on an ongoing basis. So make sure to grab yourself a copy of my dividend investing ebook and the new dividend tracker today. It's the first link in my description. So first off, without wasting any time, what is one of the main reasons why real estate investment trusts across the board are still considerably undervalued and getting beat up in share price? Now, most of the reason is because the Federal Reserve still has not cut interest rates to a point to where real estate investment trusts can utilize debt once again for cheap in order to fund their operations and of course expand and play on the offense. But this is very important, so listen in. The Fed rate monitoring tool, which is what we see right here, this shows all the probabilities of future rate hikes, rate cuts, etc. And as you can see right here, we are just a few months out until there's a good probability, unless something changes of course, that interest rates are going to be cut substantially. Now, so much to the point to where in December, we could see interest rates as low as 4.25, and then come 2025, there's a good chance that interest rates are going to be substantially lower than they are today. And although interest rates have a good chance of being cut sometime soon here, it doesn't change the fact that as of right now, interest rates are still very, very expensive, which is why stocks like Realty Income could be offering a massive buying opportunity for longer term buy and hold investors. Now, if the Fed does go ahead and cut interest rates towards the end of this year, or even substantially towards the beginning of next year, Realty Income and other super high quality REITs, keyword there, super high quality REITs, are going to rally like crazy, at least in my opinion. Now, this is because even though Realty Income doesn't have all that much debt maturing, it is more expensive to run operations when interest rates are as high as they are currently. But that being said, Realty Income does offer some substantial dividend safety, and I think it's important to note that at least as far as Simply Safe dividends, dividend safety score, Realty Income is at an 80 on the safety level, which for a single stock that's yielding north of 5%, I would say is extremely impressive. Because generally speaking, at least, as different stocks or ETFs have higher and higher dividend yields, the dividend safety is going to go down as the yield goes up. Now, of course, I'm only speaking generally. There's times where this is not the case, but Realty Income with a north of 5% starting dividend yield, and the fact that Realty Income has paid dividends consistently for over 630 months in a row, and around every year or so raises the dividend, which is also just a cherry on top. Realty Income offers growth potential, a nice starting dividend yield, dividend growth, which isn't the fastest, but it's still there, and most importantly, at least as of recently, some nice dividend safety to allow those more income-focused investors like myself to sleep well at night. And on top of that, with Realty Income currently offering a 5.92% forward starting dividend yield, if an investor needs to hold on to Realty Income, let's say for a year, maybe even 2 years, and nearly get paid 6% all along while, have the Fed slowly or of course hopefully quickly cut rates and see this thing absolutely skyrocket. Now, I sort of mentioned that when it comes to picking REITs right now, I think it's very important to not get greedy and to stick with super high quality REITs. I'm talking about REITs that have a very diversified high quality portfolio and of course offer a safe dividend if you are an investor that does favor dividend income, which I do personally. And as far as quality goes, Realty Income currently has 15,450 different commercial properties, which are leased to over 1,300 different clients. Now, let's just point to the obvious as of right now. I know some of you are probably thinking to yourself, yeah, well, you're talking that Realty Income is super high quality, but Realty Income does lease to names like Dollar General, even Walgreens or Dollar Tree, along with some of these other names in this list that are the top 20 clients that do have some headwinds. And although I do think that's a good point, I think Realty Income's price where it's trading as currently is pricing in the potential risk of some of these names closing down more stores, etc. And the fact that Realty Income's portfolio is made up of mostly grocery stores, convenience stores, dollar stores, home improvements, I think for the most part, the majority of these names are going to do just fine no matter what happens next in the economy. After all, Realty Income's portfolio occupancy has never dipped below 96%, and this is during multiple crazy times in the economy. We're talking 2007, 2008, and of course what happened back in 2020. So if Realty Income's portfolio has been able to withstand all of that and has been able to withstand the higher than ideal interest rates, I think that once interest rates get cut, Realty Income is going to enter orbit. Now lastly, very important also, let's talk about price targets for Realty Income, which side note, I currently own nearly 3,000 shares of Realty Income. I sell covered calls on my shares, and I personally do not care if Realty Income trades sideways for another 3 to 5 years, or even longer. It does not matter whatsoever to me. I know a lot of investors that bought Realty Income in the 60s or even 70s are down on their shares, but luckily for me, I've been selling covered calls the entire way down, so I've been sort of lucky. But enough about me, let's talk about the price forecast for Realty Income. This is according to Stock Analysis. It says the 14 analysts with 12-month price forecast for Realty Income have an average target of around $62.04 per share, with a low estimate of 48 and a high estimate of 74. The average target predicts an increase of around 19% from the current share price. So the analysts think the low is going to be $48 per share, the high $74 per share, the average being 62. And honestly, being a large holder of Realty Income, at least relative to what I hold, and following the stock very extensively, I think that's a very possible price target for the next 12 months. And especially if you're like myself and you have a little bit longer time frame, I don't think you're necessarily even super concerned about where Realty Income trades in the next 12 months if you are looking to buy Realty Income as a long-term dividend play, to fund your portfolio with more cash balance, of course, or maybe do what I'm trying to do here and build a dividend growth portfolio that pays for my entire life and then some. But either way, Realty Income's future is looking very bright if you ask me, with an average price target of $62 plus per share. The reality that interest rate cuts are going to be right around the corner, or at least have the potential to be. And the fact that Realty Income's portfolio for the most part is pretty bulletproof and the dividend seems very, very safe, at least as of right now. Now I say all this to say that I'm fully aware that some commercial real estate is still going to have some struggles ahead, and I don't think we're necessarily out of the woods yet. But I do think that with lower interest rates, it's going to ease a lot of the potential pain that commercial real estate, along with all real estate, is currently experiencing, and then some. So at this point, Realty Income as a single stock has gotten so large that I barely even look at it as a single stock anymore. It's more or less an ETF with exposure in tons of different diversified sectors. Now, what I mean by this is multiple different things. If you are bullish on grocery stores, if you're bullish on dollar stores, it really doesn't matter what you're bullish on. Realty Income has a ton of exposure to pretty much everything that is out there and making money. Not to mention some of the top 20 clients are super bulletproof companies, recession-proof companies, although to be fair, there's some names in here that I'm not a huge fan of. But with Realty Income having 81+% in retail and a smaller amount in industrial, gaming, etc., if you are an investor out there, like myself, for example, that wants exposure to some of the highest quality retail commercial real estate in the entire world, at the levels that Realty Income is currently trading at, I just don't get why it's not a massive buy and hold opportunity. But lastly, I also think it's very important to see what you guys think of this whole situation and where you see Realty Income moving long term. If I were to ask you to give me a price target, this is of course just a guess of where Realty Income is going to be trading 12 months from today, what number do you think Realty Income will be and why? Drop it in the comments down below. If you enjoyed this video, make sure to please drop a like on it and subscribe for more future content like this. Thanks as always for stopping by, and if you are interested in investing, make sure to check out these recent videos I posted right here.